Good afternoon, everyone, and thank you for joining me on today's presentation for California Homebuyers Down Payment Assistance Program, or otherwise known as the CHDAP loan. My name is Paul Isola. I'm the Northern California Regional Manager, and I'm very excited to do this today. Okay, hang on, people. I'm having a bit of technical trouble. There we go. So Mountain West, in partnership with California Housing Finance Agency, promoting sustainable home ownership. That's what we're here to do today. CHDAP is one of many programs that CalHFA offers. CalHFA, just to give you a little background on them, they were created by state legislature in 1975. It is not a direct lender. CalHFA is not a direct lender. Loans are facilitated through CalHFA's network of approved lenders, which Mountain West is one of them, and other affordable housing partners. They are a completely self-supporting state agency. Bonds are repaid by revenues generated through mortgage loans, not taxpayer dollars. Their mission, the Housing Financing Agency's mission, is to finance below market rate loans to create safe, decent, and affordable rental housing, and to assist first-time home buyers in achieving the dream of home ownership. So, of course, our focus today will be on home ownership and first-time home buyers. Just to kind of give you a brief overview, the CHDAP second loan, it's a deferred payment, simple interest rate junior loan. It's available in loan amounts up to 3% of the lesser of the sales price or the appraised value. And it can be used for down payment and or closing costs. It also can be used with CalHFA offered fixed rate loans as well as non-CalHFA fixed rate loans such as FHA and conventional, which is what we offer here at Mountain West Financial. It can be used with other down payment assistant loans and can be placed in any lien position. So this is helpful when you're going to be stacking loan programs with other down payment assistance programs as well. Okay, the basic eligibility requirements. The next few slides, we're just going to go over basic eligibility, and then we're going to go into some underwriting criteria. So the basic requirements, obviously, first and foremost, is that the borrower is a first-time home buyer. We're going to get more into detail on what that means in a couple slides down the road here. And the other basic requirement is that they meet the credit, income, and loan requirements of CalHFA, lender, and or insurer guarantee. So basically, they have to meet the agency guidelines for a standard loan with minimal overlays that CalHFA places over the top of it. Okay, definition of a first-time home buyer. This often creates confusion with people, but for CalHFA purposes, a first-time home buyer is a borrower who has not had any ownership interest in any principal residence during the previous 3 years. As you can see, principal residence is in quotations there, and that's to emphasize that it's possible that they do own other property, but it's just not their principal residence. And the way we prove that is we're going to be asking you to submit these files with 3 years worth of 1040s at the time of submission, and we're going to be looking for any interest claimed for mortgage interest on Schedule A. So that's how we kind of tell if they've had any primary ownership interest in the last 3 years. Occupancy, obviously the property has to be occupied as a primary residence. Non-occupant co-borrowers are not allowed. Non-occupant co-signers are allowed, but cannot occupy the property. Okay, and this will become, I'm going to get more into this when we get to the DTI requirements, but non-occupant co-signers.
I'm not looking at it on the screen.
I'm getting some feedback here. Hang on a second.
You're doing it on the screen? I was afraid to. Oh, you. Let me try.
Sorry about that delay. I was getting some feedback on the microphone here. So we'll get more into the co-signer aspect in just a few slides from now. In addition, part of the eligibility criteria for the CHDAP loan is that the home buyers attended basically an education, a home buyer education counseling class. At that class, they'll get a certificate of completion. The class can be conducted online, in person, or by phone. Put a couple of examples on this slide of some acceptable providers: Freddie Mac Home Buyer Counseling, counselor's administration search. You can Google that and you'll find Freddie Mac approved counseling agencies, HUD approved counseling agencies, NeighborWorks America, and then a lot of the private mortgage insurers also are approved by Fannie Mae, and you can go on some of their websites such as Radian, MGIC, those type of.
I wrote down, because Angela broke it down into like these 4 steps, and so I wrote them down for him.
Okay, next part of the process we're going to look at is property requirements. We've got sales price of a home cannot exceed CalHFA's posted county sales price limits. We're going to show you those limits and where to find those a little bit later. But each county has a specific limit that the price cannot exceed. But don't worry, the limits, as you will see, or if you go and look at them, they're very high. The property also can only be a single-family, one-unit residence, which includes condos or detached PUDs or attached PUDs. Additional units, such as guest houses, granny units, in-law quarters, and such, or any type of illegal unit with a kitchen or a kitchen facility is not eligible. Manufactured housing is also not eligible. Properties have to meet the requirements of mortgage insurer and guarantor. Leaseholds and land trusts, co-ops are not allowed. There is a 5-acre maximum on the size of the property, so no more than 5 acres. Any defects, continuing on with properties, any defects and or repair conditions identified by the appraiser or on the appraisal report must be corrected prior to purchase by CalHFA. All construction, either in progress or not yet completed, all construction or repairs must be completed at the time of funding, and the property must be ready to occupy. Escrow holdbacks are not allowed. The only exception there would be in the case of an EEM or energy efficient mortgage. Property flipping. A lot of people didn't know this, but please rest assured, property flipping is allowed under the CHDAP program. We just have to follow the applicable mortgage insurer, guarantor first mortgage underwriting guidelines. CalHFA obviously will require copies of all appraisals as required by the applicable guarantor or agency. So property flipping is good. We can do them. Okay, now we're going to move into some underwriting basics. As again I stated earlier, underwriting basically follows the standard guidelines of all the agencies and the investors or the particular lender offering it. So basically, if you send the loan to Mountain West, we'll be underwriting it according to our normal underwriting guidelines. Loan term of the second mortgage, again, it's a deferred payment mortgage, okay, so there are no monthly payments on it. The term must match the effective term of the first mortgage, and it can never exceed 30 years. So if we're doing a 15-year purchase, obviously it would be due in 15, likewise for a 30-year mortgage. The maximum loan amount, once more, is 3% of the lesser of the sales price or the appraised value. Continuing on, the max LTV is based on lender or investor guidelines. So obviously if you're doing an FHA loan, the max LTV would be a 96.5. And in the case of a maximum CLTV, we cannot exceed a 103 CLTV. This was a recent change by CalHFA. They're now placing a maximum DTI restriction of 43% regardless of the automated underwriting system decision. Again, this is part of the idea of maintaining sustainable homeownership. So 43 is now the maximum DTI that they will qualify a borrower. As I was discussing earlier, cosigners, that is a useful tool for people to achieve, you know, the ability to get to 43, because if you have a cosigner, they can be on the loan and you can blend their incomes of both the borrower and the non-occupant cosigner to achieve a less than 43. So you might want to jot that down if you guys are taking notes, that one way to get below the DTI of 43 is to add a cosigner. Also, along those same lines of just thinking around tools to achieve the 43%, is you can also stack this program with other down payment assistance programs to write down the first mortgage. So anyway, those are options that you can look at. Last bullet point there is no manual underwriting allowed on this. So if it does not get an AUS approval then the loan is not approvable. Okay, so like I said before, payments are deferred for the life of the first mortgage. Repayment occurrences. So these 4 bullet points here dictate when repayment of that second mortgage would be triggered. So obviously transfer of title, borrower sells the property to another individual, pay off the refinance of the first mortgage unless there is an approved subordination with CalHFA. But yeah, any type of refinance or payoff of the first loan will trigger the repayment of the CHDAP. And upon formal filing and recording of a notice of default unless it's rescinded. So those are the 4 triggers that cause a repayment of the CHDAP second mortgage. It is not forgiven. Some people get that confused with such things as a grant. This is not a grant. This is actually a junior lien program, so there is no forgiveness of debt. Okay, so another big difference between this and a standard loan that you would be underwriting for as a lender and you as an originator would be originating is that these programs are subject to income and sales price limits. Income limits, there are separate income limits for FHA and government loans than there are for conventional loans. And there are also sales price limits. And so the sales price limits, they fall into 2 categories. The first is non-targeted. So that's all 58 counties in California. They're all non-targeted. And then there's additional 33 out of the 58 targeted counties located in targeted areas, which allow for a higher sales price. The website here at the bottom of the page gets you to a link to CalHFA's website where you can find these limits out, and I have examples in the coming slides. Just to hit on targeted areas again, areas that are targeted by the federal government were identified in the 2000 census as areas in California where 70% of the families who live there earn an income that is 80% or less than the statewide median income. And again, 33 of California's 58 counties have targeted areas. Just a tidbit of info, Los Angeles County, in case some of our Southern California partners are online, has almost half of those 33. Here's an example of the CHDAP income limits. Okay, I don't know how well you can see these, but it differs for the number of persons in the household. Okay, so you would take that top line and go down, find the number of households, and just go down and find what county you're in, and that's what your median income. So, for example, we'll take Riverside, a family of 4. The income limit is $74,750. Use that as an example. Here's the income limits. These are for all loans other than FHA. This is applicable to conventional as well as USDA and VA. So the income limits are different when you're originating a conventional loan. Here's the sales price limits. You'll see that on this particular matrix that there's a difference of targeted and non-targeted as well as new construction and resale properties. So again, you can find this at the website I showed you guys earlier. Now we're going to move on to qualifying income. So going back to our sort of the underwriting side of this, there's qualifying income and then there's tax compliance income. Qualifying income is the income that's used by the lender to determine loan qualification. So this is what we would underwrite your loan to figure out if it meets guidelines. You know, we got to be at the 43%. This is different than what, this may be different than what CalHFA uses for tax compliance purposes though. So they look at income a little bit differently. Tax compliance income is the income of all, is basically income of all borrowers cannot exceed the published limits. All sources of income are used to determine compliance with the income limits. CalHFA will determine family income to compare to the limits. So family income is a little bit different than qualifying income. Family income is defined as the annualized gross income of a mortgager and any other person who is expected to be one or to be all 3 of these. Be liable on the mortgage, be vested on the title, and live in the residence being refinanced. So just because a person is going to live in the property, but they're not going to be liable on a mortgage or vested on the loan, does not mean you have to include their income. It's all 3 of these have to be applicable in order to have to count that person's income. So if you have a non-borrowing spouse who has a job and they're not going on the loan, they do not have to have their income included in the family income. Okay, this is a source of confusion, and a lot of people probably avoid doing a CHDAP loan because of this. They don't understand what CalHFA's stance on this is. So just to reiterate, family income, you have to be liable on the mortgage. You're going to be signing the mortgage note. You're going to be vested on title, and you're going to be living in the residence being financed. So all three of those have to be applicable to have that person's income considered family income. On this next slide, we show you what the minimum LTV and FICO score requirements are for this loan. CalHFA first mortgages, they require a 640. Non-CalHFA, FHA, VA, USDA first mortgage, the LTV obviously, like we said earlier, follows the insurer guidelines. So if it's an FHA loan, we're at 96.5. The minimum FICO score is 640. For a non-CalHFA conventional first mortgage, so if you're going to combine this loan with a traditional conventional Fannie Mae or Freddie Mac loan, if you're less than or equal to 95% LTV, the minimum score is 640. If you are above 95 to 100, we require a 680. Now this is for conventional. And then this last bullet point here, this just says that spouses with no FICO scores are allowed. Borrower's minimum investment requirement. Okay, so this is driven by whatever the FICO score is of the individual borrower or the qualifying borrower. So the minimum credit score between 640 and 679, the borrower is required to have a minimum down payment investment of $1,500 into the property. If the score is 680 or higher, that lowers down to $1,000. Gifts are considered borrower's own funds, but this excludes grants or loans. And obviously there can be no cash back to the borrower. Okay. Again, here are some important CalHFA websites. Here is our income limits, sales price limits, designated targeted areas, and submission documentation. All this can be found at this particular website, forms. So I'll give you just a second to jot that down before we move on to the next slide. Okay, documentation requirements. There are three main documents that must be included in the file when you submit it to us as the lender for this program. These documents can be found on our website as well as CalHFA's website, and they're downloadable, so you can just fill them out. There's a CalHFA Borrower's Affidavit, CalHFA Borrower Certification and Authorization, and Military Service Questionnaire. On that last one there, Military Service Questionnaire, that does apply to all borrowers, whether they are serving in the military or have served or not. And here's the example of the forms. Here's the borrower's affidavit. Here's the borrower's certification and authorization. And here's the military service questionnaire. All three of these forms need to be in the file at the time of submission. All right, submitting a loan to Mountain West Financial. Since we're one of the preferred lenders on the list for CalHFA, we figured you're attending our seminar here today, or webinar, and so you'll probably be submitting a file when you get one to us. So the CHDAP second has to be registered as a separate loan in WebTrack. So those of you who are familiar with our systems, you know we use WebTrack. You go in there, you log in with your username and password. You go into the upload section. You're going to upload your Fannie Mae 3.2, the same as you would for the first. You're going to do that same process for the second. And then submit it with the following documentation in addition to your first lien documentation. So we're going to need an initial 1003 for the CHDAP, signed and dated by the borrower and the loan officer. The CHDAP second needs to have its own GFE and initial fee worksheet. It needs to have its own TIL and MLDS and any applicable RESPA disclosures, such as intent to proceed. Don't forget those CalHFA forms that we talked about, the military service questionnaire, borrower's authorization, and such. So another nice thing that you guys need to pay attention to when you submit a loan is that the first lien's 1003 needs to show the second lien subordinate financing amount line item in box J of the details of the transaction on the 1003. Upload corresponding CHDAP documentation listed above into the CHDAP loans document upload screen. Our fees, there is a $250 CHDAP doc prep fee in addition to our regular first lien fees, and that says $975 on the slide, but it depends on conventional because we have a different fee structure for conventional and FHA. And then we have this $16 flood cert. So all three fees must be disclosed in block 1 of your GFE for your loan to be successfully submitted to Mountain West Financial. So that concludes our webinar for today. We hope you found it interesting and useful and that you'll go out and seek out this type of loan. It's a great program. It helps out a lot of buyers with limited down payment funds available. And other than that, thank you for your patronage to Mountain West Financial, and have a great day.